Today, I sat down with Nick Tuzenko, who is one of the co-founders of Accel Club, one of the many aggregators looking to have a huge impact in the space over the coming years. We spoke mostly about their acquisition criteria and what they're looking to purchase from an asset perspective or a brand perspective. Not my typical conversation, but it was an interesting one. And as always, for those who haven't had the opportunity to see what aggregators are looking for, it's a really good insight into seeing what most of them are going to explore. So we talk a little bit about the business and about the vision and about the fact that not every aggregator is going to last. So I hope you get some value out of this one, particularly if you're looking to sell your brand. This is going to give you some insights. Welcome to Successful Scales, the show where I talk to world-class professionals on what it takes to scale successful businesses. I dive deep asking questions to people who are running unicorn businesses, to raising funds, to buying businesses, mergers and acquisitions, IP and patent law, what is to manage performance management. I mean, the list goes on. The idea really is, how do I create knowledge and learning for you guys listening in? And of course, myself, getting the floor with people who I, in many cases, would never dream to share a room with. Before we jump into the episode, I've got to give a special thank you to our sponsors. Firstly, over at Global Wide Advisors, a leading digital consumer products investment bank focused on optimizing the sales process. An incredible team, always happy to pick up the phone and educate you or anyone about the sales process and what you should really consider, and can obviously help take you to market or even acquire businesses. I ring them for just about everything these days. Us over at Multiply Me, we are the end-to-end executive search and HR function into the Philippines, helping find better talent and onboarding them effectively. And last but not least, Escala, our management consultancy focused on process improvement, where we help build better systems for your business. That's all the ads you're going to get from me, ladies and gentlemen. The rest is all about learning. I hope you really enjoy and get as much out of these sessions as I do, sitting face-to-face with some of the world-renowned leaders in their respective fields, asking them the tough questions that they're not often asked. All right, Nick, it's been a minute since I've recorded an episode of Successful Scales, and I'm super excited to have you here on the show today. So thanks for coming on.
Yeah, thanks for inviting me. It's a really pleasure to be here.
Yeah, so I mean, we were having a great conversation already before, sort of about the state of the aggregators and, you know, a little bit about sort of what does the vision look like around Accel Club and, you know, how long in market and what this looks like. But before we jump into anything that's Accel Club related and, you know, what you guys are doing as a business, I'd love you to tell, much better than I can, a little bit about your history and who you are. And, you know, let's get the listeners invested in understanding who we have here today. So let me pass it over to you, my friend.
So yeah, a little bit more about like Accel Club. So I'm one of two co-founders at Accel Club. And I mean, we are buying and growing FBA businesses. So pretty hot topic these days. There's a lot of like players who are doing that. So we're one of the team that is doing that. So we trying to reach out and try to find like great brands that already great entrepreneurs, I mean like third-party sellers created, and trying to get that to our portfolio and even and grow it even further. Yeah. So this is like what we're doing here. I mean, we full like seller. We are operator. So we're not like investment fund or whatever. So we're not just like investing or buying like some part of the shares or equity in the sellers. So we buy out like 100% of the company and operating that from day one. Yeah, like as our own brand, like 24 hours, 7 days a week. And yeah, I'm talking a bit more about myself. I'm coming from like academic background, so I thought that I would like always in physics, and I have won like several like international competition in physics and math, like in Paris, in Mexico, etc. But it turned out that I found myself like in BCG. It's like management consulting, Boston Consulting Group. And after that, yeah, I joined like a really great startup, Busfor. We were building like marketplace for road trips, and successfully exited that in late 2019 to French unicorn Blablacar. So guys doing like carpooling, and they just wanted to extend their offering to bus trips, and this is how our acquisition worked out. During my years in Busfor, when I was like managing director for Russia and for Belarus, we also acquired several companies, and it was like software companies. So it was like it was like 4 acquisitions. So I'm pretty not only like from the let's say financial background, but also like from operating background, what is buying companies, how to integrate them, how to working with them, all of that stuff. Yeah. So I guess this pretty much helping me, to build an Accel Club, and also like the overall idea when we just discovered the business model and discovered the space with Max, my partner and our CEO, the opportunity to build something great here in Amazon space. We really believe that our background matches like all the all the pillars that you need to be successful in Amazon aggregator space. So this is plus mindset.
That's great. That's great. Super interesting background. I mean, I really want to dig in. So, I mean, we didn't speak a whole lot about what both of my companies do, but one of my companies is a process improvement consulting practice. We took a lot of talent out of Ernst & Young, some out of Accenture and Deloitte. We don't have any BCG guys yet, but we're working on it. So what was your function when you were working in BCG?
Yeah, it's like it's pretty general. Yeah, I'm like, as in management consulting, you're working with different industries and with different companies. So we were doing like bank strategies, or like some government initiatives, or some oil industry. So it was like quite like different industries, but it's all was about management. Yeah, so either it's like operations, or some strategy, or some marketing initiatives. So yeah, it's more focusing on like how to strategically grow company, and how strategic to build like operational excellence inside. Yeah, but it was like really big corporations. So it was like top tier banks, or oil companies, or IT or tech companies.
Mm-hmm.
So I would say like I'm quite familiar with what it's like to have like 20,000 people in your team, and how it works, what the challenges, what the issues, and one day I do believe that it will help like also with Accel Club, and like we are pretty going there, like in terms like the size of the team, etc.
No question about it. I mean, it's very apparent to me already that you're definitely the operational brains in the business, and having a background in BCG management consulting, and obviously, everything that you've done to date, builds for a very strong baseline. I mean, we had a talk. You said that was 3 of you. I think at the start of the year, you're already at how many? 100 and what team members?
Yeah, we're 100 plus people right now, and we have like 80 plus roles that are open. Yeah, so we are hiring like a hell. Yeah, so it's really interesting. Yeah.
Which is crazy because we look at the lens, and again, we were talking a little bit before around sort of the state of play right now, and a lot of aggregators in the space have raised a lot of money. I think of known capital raises, it's somewhere north of 12 billion right now, and of unknown, there's a whole lot more as well that are just a lot of them that are still in stealth mode. So they will come to play, but the whole premise really is about how do we help educate people on growing successful businesses. And so, I mean, I'd be really curious before we even dive into your history. I mean, how do you even build the roadmap and successfully hire 100 plus people in the space of 12 months? And, you've got a hiring roadmap of 80. Like, have you guys taken the approach of building out your org strategy and structure for the next 2 years, 5 years? Like, what does that process look like? Because again, thinking through or trying to share knowledge for potential e-commerce and Amazon business owners, and anyone who's listening to this podcast, these are fundamentals in building serious companies. So I'd love to hear sort of how you've approached that.
Yeah, it's like it's pretty straightforward. I mean, like we just like really up to like BCG. It's like the main tool that you have like Imagine Cloud is common sense. Yeah, so this is what really like helps you in any situation. Yeah, so here it was like also the same. And like we are first of all like after our first acquisition, And after like a lot like talking to different experts in the field, we just like have understanding what we need like for one brand, how it works, how many like supply chain guys we need, how many operations guys we need, how many like branding projects, whatever we need, how many creatives, production we need, like designers, for the shooting, all that stuff. And so as you understand like what you need with like one brand, like smaller or bigger, then you just like trying to scale that for different brands, and also understanding that when you have like, let's say 10, 20 brands, you also like need more like middle management between you and the brands, to make sure that you're also like covering all the details. You pay enough attention to any details in different streams that you have in the business. So yeah, so it was like like understanding what you need for one brand, and then just understanding the roadmap in terms of like the acquisition. So how many acquired EBITDA or brands you will have like in 6 months, in 1 year, in 2 years, and knowing that you understand like how what the size and what the function and what the role and what team you will need to have like in place in 6 months or in 12 months. And yeah, as I said, like also like adding one more layer in terms of like the management, because I'm like it's like it's much easier, I would say, like to operate one brand, and then you have like company with with dozens of brands and like thousands of products. You need to make sure that you pay that attention. It's like, because it's very easy to really lose like that kind of like sharpness, thinking about like this specific SKU or this specific creative asset, or yeah, anything that is like really detailed. And it's like, I really like the saying that retail is detail, and this is like one of our motto inside. So I'm like, we all understand. It's like you don't need to solve like a quantum equation to be successful in economy. And like you need just to make sure that all the thousands of different interactions, starting like somewhere in China in the factory, ending like with Amazon sending your parcel to a customer, that all the thousands of interactions are like efficient, are great, are having like really great like loop. If there is something happen bad, it's like get fixed, all of that stuff. Yeah. So yeah, like it's just like you need to make sure that you pay that attention.
Yeah, and I think it helps that you can solve quantum physics equations, and you're an acclaimed award-winning physicist, mate. So for
Yeah.
you, it's really simple, right? And this is again what you've done inside of BCG, and it puts you in a really good stead as well to be able to build something that is going to be a behemoth in the coming years, and to have already brought on 100 team members and to look for 80 more. I mean, that for most people building the average business, that's a pretty huge effort and initiative. And so just to sort of break it down a little bit further, or sort of taking it down again, we were talking about, well, what is the acquisition, right? Like, Accel Club's objective, I mean, I'm just gonna make generalizations around sort of the aggregator equation, right?
Yeah.
So the objective is, how do we find a good asset that's a brand? How do we acquire it and make sure that it's large enough so that it's actually going to have impact to this, the relative size to our investment portfolio? You also have the aspects depending on how you've raised, whether it's debt or whether it's venture. There'll be sort of that time crunch of, I need to 2 or 3 exit in a certain period so that I can pay back that debt, and all those equations. But I think like one of the really important things that I'm taking away from your communication in how you're looking to build is that when you look to acquire a brand, you're acquiring the asset that is the brand. You said, we want to acquire 100% of the asset. And so for anyone who's listening in and building an e-commerce or Amazon brand, building out these functionalities and building out the aspects of how this runs in an optimal fashion sets you in really good stead to have a conversation with Nick and his team, in order for them to understand, well, what are we actually talking about here? If it's you, the individual founder who's running around and doing every single aspect of the business, not only are you going to run out of the 168 hours you have in your week, but you're also going to lose your mind doing it. So taking that step and really building on that, what does the future state look like? Or what does my roadmap look like if exit is the objective here? What does my growth and trajectory look like in order for companies like Accel Club to actually acquire me? Is a really smart strategy. So, I mean, I'd love to hear a little bit about your sort of acquisition targets. Like, if anyone's listening and looking to potentially sell their brand in the future, like, I'm very fortunate. I get to speak to a lot of, founders of aggregators, and I'd also love to talk a little bit later about sort of the thesis that you've come up with and sort of the longer term strategy. But, what are you guys looking for from a differentiation standpoint?
Yeah.
Like, why would I come and sell my brand to Accel Club?
Yeah, so let's then maybe split like this to three questions. Yeah, the first one is like, what's really Aggregator and Accel Club is looking for? The second one is like, why Accel Club? Yeah, and the third one is like, what you can do for the next like 6 months or 12 months to make sure that your exiting is like much more valuable. Yeah. So
Perfect.
answering the first question in terms of like what the aggregators and especially Accel Club is searching for. Like we are looking for the assets, yeah, and we're looking and it's like definitely it's like private label businesses because I'm like arbitrage or drop shipping. There is not that much value to invest. Yeah, you can like make cash, but I'm like investing in that. There is nothing to really to scale. So definitely it's like private label businesses. Definitely you need to have some traction to make sure that we already buying some asset. Yeah, so it's definitely like the size. And if talking about the size, I'm like definitely what we are carrying is that we are adding a lot of like team efforts to the brand, and we need to make sure that it's efficient. So in terms of like the size, we're looking at least like for 1 million in sales. Our sweet spot, so what we are really liking buying is like from 5 to 10 million in annual sales. But like starting from 1 to 2 million in annual sales, it's already good. So like we already understand that there is some traction, and we can do something with that. So the first one is definitely like private label business with some traction. So with size starting from 1 million in annual sales. The second one is definitely like margin, and the third one is growth. Yeah, and talking about like margin and growth, I'm like definitely there's some numbers that you can really easily see in your, I don't know, like in any tools that you're using to track your profits or in Excel. But I'm like, you need to better understand what is like underlying of that like margin and growth. And it's like there's a lot of like private label businesses that are like private label business, but actually they are more like arbitrage. So they are, it's like they are, I would say sometimes like more about like the manufacturer, for example, in China hasn't yet like in the marketplace, and some like entrepreneur got that product and with that product inside the marketplace. Yeah, so they are just like arbitraging, like in terms of like the timing of the start of selling or whatever else, like there is some opportunity or gaps in the market.
Would you sort of define that, just to sort of take that further? Would you define that as you're not really looking for, I forget the example everyone uses, the onion, like the onion peeler, or like the generic product that is, you find a gap in the market, off you go. You're actually looking for brands before Chinese sellers come into market.
I would say like we are trying to look for that. Yeah, and there is not that much. There not that many of them. Yeah, but like sort of like talking about like what is really driving value here is like to make sure that in your underlying like private label business you have like the right fundamentals. So what I'm talking about, yeah, I'm talking about that you have competitive cost of goods sold. Yeah. So for example, we've seen like a lot of like dozens, even I guess like 100 like sellers who are having like 30 or 40% higher cost of goods sold than their competitors. And it's like you can like make some money for 1 year or for 2 years while there is like great demand, especially during the COVID or during pandemic. But as far as the market is getting more like mature, definitely if you have like that competitive disadvantage of like cost of goods sold, you definitely will not be like competitive, and it doesn't lose the game. So and the same for trust. Yeah, and like if you're talking about the private label business, there's like for us two main like basic fundamentals. Yeah, the cost of goods sold, and the second one is the Yoni, sorry, can you interrupt? Can you just like that? 1 sec.
For sure. All right, let's take it from where you were at.
Yeah. So, and just like for us, like private label businesses, they are about like two main fundamentals here for cost of goods sold. So you need to make sure that your manufacturer is producing that goods like with a competitive cost of goods sold. Yeah. Why? Because like if your competitor have like 20% more margin to spend on pricing or on advertising or on lighting deals or whatever, I'm like definitely in the long run you will lose. And the second one is like what the trust you are building with the customer, with your listings, with your creatives, with your branding. So all about like CTRs and conversion rates, yeah. And this is what we're trying to look like when we are talking about like targets, yeah. So if you have like great reviews, if you have great like cost line, I'm like definitely you've built something that could like live like much more sustainable, yeah. And this is like what can be valued much more, yeah. So yeah, and this is like what we are talking about when we talk about like margin and talking about like growth. We're trying to assess these two parameters because we do understand that more modes in terms like ratings or reviews you have, better cost of goods sold you have, more sustainable your margins is today and will be like in the near future. The same with the growth. Yeah, I'm like if we see that you have like great conversion rates, you're getting great like CDRs, and we do understand that you are competitive, like playing with the pricing, playing with the branding, investing in PPC or in any other stuff that you need to invest. Definitely, you can grow. You can bring here growth. Yeah. So this is like yeah, for us like 1, 2, 3. Yeah, size, growth, margin, and we're trying to answer that, trying to better figure out like what drives for this specific niche, what's really like driving margins and growth here, yeah, and what the opportunity, what the size of the opportunity here. In terms like why selling like to Accel Club, well, how we stands out, yeah. But for us, it's more. I mean, we have like I would say like several topics why I mean it's really great to work with us. The first one is that I'm like we definitely paying I would say like, higher than the market. So we definitely see that when like, we're talking to a lot of sellers. I guess like we already talked to 1,000, and we do know like where the market is, and we do know that we are higher than the market. The second one is like we have like our earn outs. So usually how the deals look like, you have like cash out at the closing.
Mm-hmm.
So like let's say like if it was us, like we're really fast. So it will be like 3, 5 weeks, and you will get like your money, and you have like cash out, and then you have like for 1 or 2 years like some earn outs, and we are based that on revenue, so not like on EBITDA. And this is what really like sellers like about us, because I'm like you are like first of all it's very easy to check, and you don't need to audit or understand our expenses, whether we are efficient in performance marketing, whether we are efficient in any other types of, whether our shipment is efficient or whatever. And the second one, I mean, it's I mean, a lot of aggregators and also like us, we are much more focusing on growing the brand, on growing the market share than growing like the marginality. Yeah, definitely, if we have opportunity to grow like margins in line with the revenue, we will be doing both. But like if you like trying to choose from growing market share or growing like EBITDA, definitely we will growing revenue and market share. And in the way, if your earn out is like based as with us like on revenue, you definitely much more aligned with our interest. Yeah. So for the first like 1 or 2 years, our margin could like be decreasing, but our market share could growing, and you will earn with us. Yeah. So it's also like good. The third one, like we fully incorporated in the US. And this is also something that for a lot of like US sellers or the guys who have like US entities, US assets, it's much easier to deal with Delaware with like with US like corporate laws than with like European or any other. Also like we always, I mean, you always can have you always have like the opportunity to talk to me or to Max, so you always can have opportunity to talk to decision makers. So we definitely have great like acquisition team. We have a great VP of acquisition, Oscar. He has like great team. But anytime you would like to talk to us as the founders, I'm like we are there. And this is also like very, very important because I'm like we are entrepreneurs by ourselves. We make deals by ourselves. We have like exits by ourselves, and we do know how. I'm like even though you have a great team in place, sometimes you need to talk to founders. And with us, you always have the opportunity anytime, either like via WhatsApp or just having a Zoom call, whatever. So, and we really, really like fast, like especially for the US deals. I'm like, let's say for the asset deals. Yeah, because like for US sellers, we usually doing like asset purchase agreement. So we're usually buying assets. We're not buying entities. For UK, for Germany, definitely we're buying entities because it's like more beneficial in terms of like the tax perspective. But if you're talking about the like really fast, so it's like takes like 3 sometimes to 5 weeks from the day we sign letter of intent. So we agreed like on the preliminary terms to the day that you got like your money on the bank account. So it's like really, really fast. And it's like with us, what's like really, really great that we do know what we are searching for in the diligence part. So when we sign LOI, I'm like, we know what we are checking. We're checking cost of goods sold because it's not like in your Amazon. Everything else is like in your Amazon. It's like really, really easy to check. The second one is like Amazon Health. So to make sure that today we invest and it will not be banned in 3 weeks or in 3 months after the closing. And the fourth and the third one here is like IP rights. Yeah, so to make sure that trademarks are good and you're not like infringing any like patents or whatever there. So I mean, as far as we check that, we're good. We're not like it's like of course we are asking a lot of questions, but all that question regarding like customer support or let's say like your suppliers, it's much more about like integration part. It's not like the diligence part, because what you need to do to do deal, you need to check is like financials and I'm like everything except COGS is really easy to check. You have like Amazon Access and that's it. I'm like everything, your performance there, your revenue there, your pricing there, everything there, your promo there. So this is like why we really fast because I'm like we know what we are searching, what we are validating, and in let's say in 7 to 10 working days, we usually are very good. So you already know that we are saying yes, and like we are confirming the terms, and we can move further to signing actual papers and all of that stuff.
Makes it very, very, very simple.
Yeah, and talking about the third topic that that you asked, like what like entrepreneurs, what third party sellers could do, like to really boost the valuation in 6 or 12 months, and I would say like really, really trying like to stay focused, because I'm like today like a lot of like guys like trying also like they have like great business on Amazon, they're trying to also expand to Walmart, to other like to Shopify, to all the other marketplaces and opportunities to grow more sales. And I would say like it's more about like to stay focused and to try to I do believe that for any FBA business, you can like increase your margin like in 3 to 6 months, at least for 10%. So if you have like 20%, it could be 22%. You just need to push on that. You just need to focus on that. So really, to try to understand where your main assets and where your main opportunities lie. So not to try, to take like 1,000 stuff and trying to do that in parallel. You have like really, really like limited resources. So just try, to make the roadmap for 3, for 6, for 12 months, whatever you are believe you would like to exit, like in whatever timeline. But and try, to try to focus on the stuff that you do believe that can grow more profitability, more growth, or just more sustainability. Yeah. So maybe try to if you haven't like yet signed like NDA with your supplier, sign that. If you have like any disputes or any understanding that there is some like patent or some other like legal formality, just make that. So like try to make your business more sustainable in terms like the margins, in terms like the growth, in terms like whether someone can copy you easily or not. Yeah, whether there's like some modes in terms like reviews, ratings, all that stuff. There's always quick fixes. There's always quick wins. Yeah. So if you're planning like exit in 3 to 6 months, just focus on that. Not try to expand to Walmart or to Target or to Wayfair or with Shopify, because it also like takes a lot of time. And if you have the like bad results, it also could be like bad for us to assess. Because when we see in like purely FBA business, we do understand that we have opportunity to grow that to new markets, into newer channels. And like we have like other projections, and usually other projections is better than what you can do in 3 weeks. Yeah, because I'm like, if you go there and trying to do everything like simultaneously here there, I'm like, usually you will get that not you will not deliver that great like execution. Yeah, and it's better to leave that on the table as their opportunity for us and sell that than like purely execute, and then we will see that and saying, okay, like we didn't see that we have a lot of opportunity with Shopify, but maybe it's not because like we didn't have, but because you managed it poorly, because you didn't have like enough resources, you haven't like spent a lot like focus on that. So sometimes just like leave some opportunities on the table and just like sell them to us, not try to execute everything, because yeah, I'm like bad execution never sell itself. Yeah, I'm like just like the results that you have in P&L, we just see that and saying, okay, there's no opportunities. So yeah, like I would say like stay focused and trying to separate like what opportunities you will sell to us as opportunities and what opportunities you would like to execute in the nearest like 6 or 9 months, and then sell us results.
Yeah, and that's a great insight. I mean, you're not going to change the DNA of a business in the space of 3 or 6 months. And so if your
Yeah.
objective truly is to exit, then focus on those quick wins and, any aspects that can help build a moat and create more value around the asset that is your business, then move forward with those for sure. If you are Accel Club though, and you have a focus on, 10 years plus in market and you're about building staying power, that's a very different story. And I'm creating my own segues here. So I want to segue a minute here and talk a little bit about the state of the aggregators. We had, a little bit of a back and forth as well before we hit record, but, as someone who's building one of, plus minus 100 aggregators in the space and, having,
Yeah.
obviously there is differentiation across every aggregator that we work with and that I speak to. Of course, all teams are not built equally, but I'd love to get, as someone who's living and breathing the aggregator model, what do you sort of see coming down the pipeline over the next 3, 6, 12 months? What's your take? How are things going to play out? Because it's we're in the most exciting time, I would say, in the history of e-commerce, and it's only going to get more exciting. But yeah, from someone who's building one of the big ones, what are your predictions?
Yeah, it's like I do believe, and sometimes we're talking like to a lot of like sellers, to a lot like guys from e-commerce space, like and someone just like trying to pursue me that I'm like not everyone, not every aggregator will succeed. I'm like, we fully understand that. I'm like, I don't believe that there is any aggregator that and any team in the market that believe that any aggregator will succeed. I do believe that 80 or 90% of them will be dead. Yeah, and either in 1 year or in 3 years or whatever.
What do you actually define? So what would you call the death of an aggregator?
Yeah, it's like if you're like trying to dig deeper in terms of like how our funding is working, we have like equity part, we have like that part. So you need to understand that like aggregator is really like leveraging their businesses. So they're using debt. And when you have the debt, you need to pay like interest on that. Yeah. So you really like need your brands to grow, or at least like to be flat with that marginality that you are acquiring them. So there's like a lot of like stuff that could go wrong. Yeah. First of all, you can like, I don't know, like some of your brands cannot not grow. Yeah. So, or let's say your margins can like be really suffer. Either it's due to China issues with like all the shipments, with all the crazy container prices.
I guess where I was driving towards is you're saying like the death of an aggregator really effectively means they're going to default on their repayments and their loans and their debt, and that's it. They're actually, so I guess where I was trying to drive towards, like, is that consolidation? Is that an aggregator selling to another aggregator? Do you see that as death or just a smaller arbitrage play?
Yeah, I'm like, there is no one aggregator in the space that could be like win from selling to another aggregator, because I'm like, it just doesn't work like financially. Yeah, so there's like certain like multiples that we are paying for sellers, and there is like no one who will pay for us like much more than we are paying to sellers. And so like to cover all the costs that we have, all the teams that we have, and all the expenses that we already have when we are acquiring businesses, it's also like you also need to spend some money, whether on your acquisition team, on lawyers, on everyone. Yeah. So having all of that, I mean, there is no like profits when you're selling aggregator to aggregator. So usually it's just like that end. So it's like, it's maybe not the worst that could happen, but usually it's just like something that could happen with like some aggregator. If but it's not like the let's say even like neutral position. It's definitely the lost position. Yeah. So it's like some option when you didn't have like really any options. Yeah.
Yeah.
So this is why I'm saying that it's also for me like the death of the aggregator, because I'm like no one, there's no success. Yeah. I'm like no one will win from that. And yeah, but talking about like different factors that could lead to that, definitely some of your brands could not doing well, and in terms of, like the revenue growth, and in terms of like the margins. Yeah. So and also like there's a lot of like pressure from Amazon, and like every seller know that. So there is like launching new products is like more and more sophisticated, and you need to be more tricky in that. And in terms of like in terms of like the actual like bands, yeah, and like there is also like a lot of like issues and challenges there for us as the aggregators. Yeah, because when you buying someone, you're buying like everything. You're buying like great products, you're buying like great whatever margins, team, whatever. But you're also like buying like all the history. Yeah, you're buying like all the, let's say maybe some great tactics that guys like used. And you need, I mean, sometimes there is questions from Amazon. Yeah. So you just need to make sure that you're also like good with that, because like any band with like, let's say 20% of the business that you bought, and that's it. You're that. Yeah. So I mean, there's a lot of like stuff that could be wrong, but I do believe that, you know, as e-commerce, as Amazon is getting more and more mature, more systematic players will win. Yeah, will have more market share. Will have more. I mean, if you can, like, let's say, plan long term, like for 3, for 5, for 10 years. If you can invest in software, if you can invest in expertise, if you can invest in team, in talents, if you can like really acquire like great talents from the market, you definitely will win. You definitely will have like more chances to win in the space. I do. I mean, no, not every aggregator can deliver that. Yeah, this is like, it's true. Yeah, but and I do believe that there's like great sellers that could deliver that, and we know like Gorilla Grapes, or you know like upper echelon, or any other big sellers that also can deliver, like creating great teams, creating great tools, and investing a little bit more like long term. But like on average, like sellers can't do that. They can't invest for 3 or 5 years. They can't like invest in, let's say, software development, which is like millions of dollars. They can't invest like in great talents from some like experienced backgrounds, because it's also like it's like, I don't know, like 300 or whatever K a year. So like only like without in bonuses. So it's like hard to do that when you have that size, and when you have that perspective, and you have like access to funding or to financials as we have. Yeah, but it's only like the prerequisites for doing that. It's not like prerequisites for the success. Yeah, I mean, there's a lot of like stuff that could go wrong for any aggregator. Yeah, and I guess like there is a lot right now like discussions around Thrasio and other big names like that. And like there is some issues with execution and with like results. Yeah. So yeah, I'm like in terms like the what we see and what we believe. Yeah, I'm like you need to always like what the main challenge is for us as the aggregator is to make sure that we are paying that much attention to any details that matters that small seller can. So when you have like 10 SKU, you know them, you know the market, you know everything. You know like what's the quality of the materials that you are doing your products. You know what's the difference between you and the seventh competitor in your niche or whatever. Yeah. But when you have like thousands of SKUs, when you have like multi-brands, you have dozens of brands, I'm like, what's the main challenge for us? And I do believe that's like a main challenge for any aggregator in the space. How to make sure that you are scaling that creativity and that paying attention to details while you have like hundreds of people in the team, when you have like thousands of SKUs, yeah. And I'm like, we do believe that we can deliver that. This is why like definitely we are doing this, and why we in this game, because we do believe that we can deliver that. We already see that with some brands it works out. Definitely, and like we have challenges with some SKUs that we bought, and right now we're just like trying to turn around, trying to fix that. But there's a lot SKUs, and there's like majority of our brands and majority of our portfolio is really performing, and we just see that. And for us, the next step when we will be like right now it's like hundreds of people, and we'll be like thousands of people, how to maintain that, yeah, how to make sure that, yeah, like we know competition, we know like materials, we know like customer needs, we know like all the aspects of Amazon tools, yeah, because this is also challenging, yeah, when you're like seller with like 5 people in the team, and with all the new features that Amazon is also creating for you, with all the stuff that's going on around like in terms of like the social commerce, yeah, I mean it's really hard to deliver without the team. And this is also like one of the reasons why we believe that sellers are really like selling their businesses right now, because there's also a lot like people asking us like, why are they selling if they have like that great businesses, yeah. And because like sometimes entrepreneurs need to become like CEO of their businesses, they need to build teams, and it's not for everyone. There's a lot of great sellers who are more like designers, who are more like creators, who are more like visionaries, yeah, and they are less like CEOs, yeah, they are less like guys who can like build like who, let's say, maybe they even can, but like the question here, but they have like enough
it's a different skill set. It's a very different
yeah.
skill set. And, you know, as someone going through that transition of, you know, being the entrepreneur to trying to run an operation, you really have to look at the world differently. It's no longer what can I touch and handle and be a part of, and it's how can I unlock the capabilities and provide really deep focus and opportunity around the specific functions that make the business great.
As I usually say, it's much more abstract.
Yeah,
I mean, it's much. I mean, you have like interfaces. You're not like dealing with a lot of like details. You don't feel that, and you just need to make sure that you have great talents in the team. You have great process, and you have great tools, and it's all together works. Yeah, then it could work. Yeah, I mean, and I say like we've seen a lot of like sellers, and we do believe that a lot of them could do that, but maybe it's like even like they didn't have that energy. They not like so they're not that excited about that, and they just won't do that, and they yeah, I'm like, and this what we believe that is it's more about like for systematic players to have more market share within the Amazon. I do believe that there will be like small sellers. I mean, there is some people saying that it's like aggregators just like eating the Amazon, and there will be only aggregators. No, I'm like it will not be that like 0 or 1, like black and white.
I would say until aggregators can build highly functional product development teams around specific verticals and products that they're delivering, and where, in my opinion, years away from that, from being a potential reality, because that's not how most aggregators are looking at the world right now. There's going to be a lot of room for sellers to continue to innovate and do what they do best. But man, I'm looking at the time and I realize we're already over here. So Nick, mate, it has been honestly a pleasure having you on and getting to know you a little bit and hearing a little bit about the vision and about Accel Club. And I'm really excited to watch your growth and what that looks like in market over the coming years. I was actually saying to someone the other day, I want to do like a session a year on with everyone that I've had on and see like, what's their current state and what does life look like? So I'd love to invite you back at that stage. But before I let you go, I'd love you just to share, what would be the best way for someone to get in touch with you, or if it's Klim or whoever the best person is, let me know, or let the listeners know, so that we can make sure that happens.
Yeah, you can visit our website, accel.club or accelclub.pro, and there's the form. Or you can just I can share like my Facebook details or LinkedIn details, so you can easily reach to me like directly. Or reaching to Oscar or to Klim or to anyone from our team, either in LinkedIn or Facebook. So just start the conversation and we'll get that further.
Perfect. Well, Nick, we'll put those in the show notes. And yeah, it's been great having you on. Thank you so much for your time and best of luck.
Yeah, thanks. It was a real pleasure to be here. Thanks.